Ireland Business Development from Dezan, Shira and Associates, who will kick us off with the broad overview of tech impacts from COVID-19. We will move to Shira, who is the head of technology at the Department of International Trade China office, who has kindly joined us to share her and her team's work on understanding the technology sector's response to COVID-19 crisis in China. And we also have Dr. Jian Cao, who is the partner at the UK China Enterprise Fund, who will give us a bit of insight around what is the impacts on investment scene across UK-China tech corridor. So before I give the word to Maria to kick us off, just a couple of ground rules for today's meeting. We've got quite a few people on the call, so please keep your microphones on mute. If you're not speaking, please use chat function as well to ask any questions. We're going to be monitoring this section, and at the end of the session, we'll have a Q&A session. We'll try to answer as many questions as we can. If we did not manage to answer the questions during the session due to time limits, we'll follow up post events. And just to the last thing from myself is the session is recorded. We're going to be uploading the session together with an insight on our Tech UK's and CBBC's website. So if you want to review the session at a later stage, that's also an option. And to kick us off, Maria, I'm giving the word to you to start the presentation on broader picture of COVID-19 impact on tech.
Thank you, Dominic. Let me share quickly my screen. Okay, so hello everyone, and welcome to today's session. How often have we raised the question on the impact of coronavirus to the global economy and our lives? It became obvious that technology is playing one of the key roles during the pandemic, and the virus is going to have a significant impact on the global tech industry. China is a home not only of the large part of the brains of technology sector, but also its heart, with facilities producing parts and components and pumping them through the veins of the global supply chain. It is difficult to predict what the final impact will be. However, we will try to look at the current state of Chinese market, the impact on the trade supply chains measures, what was put in place by the China government, China's strategy for the digital economy, and what are the opportunities that lay among the tech sector. It is anticipated that the global economy will shrink by 3% this year and partly rebound in 2021. While advanced economies and emerging economies of G20 are predicted to contract by almost 6% and 3.5% respectively, there are only two economies that are predicted to have a minor growth. It is China and India. China is expected to grow by 1% in 2020 and about 7% next year. In the first quarter of 2020, the spread of COVID-19 in China led the authorities to introduce a range of measures to control it. This includes travel bans, business closures, and quarantines that substantially disturbed trade. There are several characteristics that deserve attention. Imports and exports fell by 6.4% on year-on-year basis for the first quarter. The decline was not as bad as expected, actually. The imports and exports already improved in March as the businesses started to go back to normal. It is also important to point that for the first time, ASEAN replaced EU to become China's the largest trading partner. The Brexit factors of the UK were superimposed. When we look at the technological products, Chinese producers have gained market share in the key segments, but still rely on global value chains for inputs. In some cases, like solar panels, high-speed rail, and digital payments, Chinese suppliers accounted for significant shares of both domestic market and overall value chain. In majority of other cases, Chinese suppliers accounted a significant share for domestic market, but still rely on imports of the larger share of components. For instance, China smartphone manufacturers account for more than 85% of the domestic market, but more than 50% of the components are sourced from multinational players. Finally, there are technology products that, like semiconductors, where Chinese producers rely heavily on foreign products. It's also important to point that at this stage, China has been following global technological standards for the mainstream application. Technology products were among top products with significant decline in import and exports. For instance, electrical equipment and auto processing units declined largely in Q1. You can see it in this chart. It is anticipated, though, that tech spending in China will resume growth by the second quarter, ultimately growing by roughly like 2.3% to 4.5% in the full year of 2020. Due to the complex nature of the high-tech industries, technology value chains are global, and China has been one of the largest players in them. The pandemic started in China has been created disruptions of the value chain, which have been already under pressure due to China-US trade war. Firstly, the decline in the production and trade due to initial lockdown in China. It led to the strong impact on countries further up and down the supply chain. Industrial production dropped by 8.4% in Q1. Further, although China started to gradually recover, the lockdown spread across the globe, and as a result, there is a significant drop in the demand. However, COVID-19 impacted tech firms unevenly. Some businesses, such as those supplying technology used for autos or aircraft, face steep declines in demand. Others, like producers of entertainment products, such as video game systems, are actually seeing an increase in demand. Due to the serious supply chain problems in Asia, many realized the need to restructure complex supply networks and make them more redundant. About 20% of electronic suppliers estimated to delay about 8 weeks in March. Those who needed to find suppliers abroad to compensate the production that was suddenly frozen in China were exploring the opportunities of bringing production back to their home countries, which may increase significantly the cost and inventory, or considering China Plus One strategy. Google and Apple, for example, were among leading companies that accelerated efforts to relocate parts of their production from China to Southeast Asia. To cope with the rise of online consumers and in order to build more resilient supply chains, businesses will likely turn to the core technologies like Fourth Industrial Revolution. For instance, cloud computing, AI, machine learning at the plants. It will also require a different set of skills from the factory workers. What are the measures that have been implemented in China to recover the economy? First of all, the major priorities right now for the government are unemployment and resumption of production. Current unemployment rate in China slightly improved, and it is close to 6% in March, comparing to 3.8% in 2019. Nearly all major industrial sectors, industrial enterprises have resumed work, and about 80% of the smaller businesses returned back to work already. China put in place a range of measures to support the economy, which was supported and continued to be supported by the technology. For instance, there is a national government service platform that allows to navigate relevant implementation measures such as tax breaks, social insurance cuts, financial stimulus. For trading companies, for instance, who want to apply for the export rebates, you can do it online, paperless, through the channel of technological export and import platform. I also should point that the health monitoring system that was implemented in China proved to be a success. From the beginning of COVID-19, there was national application enrolled to monitor conditions and movements of people in China. Now, as cities lifted the lockdowns, the system continued to monitor movements through the application on WeChat or Alipay. that are also linked to the systems like transportation and health department. Basically, it is required to scan a QR code each time you leave your house to the public places like restaurants, or you go to public transportation. If your color is green, you are safe to go anywhere. But if after you scan a QR code, the color shows yellow, it means that you have been in contact with another infected person. For instance, you bought a ticket on the train next to the person that was later tested positive, or you returned back from the province that has a high risk. So it means that you have not finished yet your 14 days quarantine. Red color means that you either have a coronavirus or symptoms and you are waiting for diagnosis. This system shows the importance of technology, connecting various data, various systems and departments, government departments. And it basically allowed to monitor a huge population of China through the technology platform. Here we want to look at the digital economy and the future trends and plans. So Made in China 2025 is China's bid to define global manufacturing. It caused a stir when it was launched in 2025, but then a 10-year program was just the tip of the iceberg. It is not a standalone project, rather it provides a position of the next bigger move, a program to define the rules of global production and exchange. It is called China Standards 2035. With China Standards 2035, Beijing intends to set the foundation rules that will define next generation of technologies, from telecommunication to artificial intelligence. The idea is that we are entering the era that will be defined by the new technological systems and networks. But the leaders in those are yet to be determined, and this gives China the opportunity to determine that. China plans to participate in the formation of international standards that will further linked with Silk Road initiative to build one digital ecosystem. Such crucial future technologies as Internet of Things, cloud computing, 5G, and artificial intelligence are the main focus of these standards. We see significant interest in the increase in the number of inquiries. Recently here, we just try to briefly outline those sectors, those segments where we see most of the opportunities and inquiries that are coming through. We can't deep dive into each of them, but just the outlook of what we see as a trend, and we see more and more businesses are actually looking to invest in these areas. Just as an example here on based on the ICT market, summarized here like as a chart. You can see that the hardware producers of ICT actually hit more badly than the software. But the impact overall will be limited to the first quarter. For instance, telecommunications or cloud services have a positive impact due to increased demand. So you can see that in green here. With all the potential under the segments, it is also crucial to define where the foreign investment can actually enter and to make a proper assessment of the legal requirements for the market entry. There might be certain restriction to participate or will be required for certain type of the legal entity. There might be requirements to obtain special licenses like ICP license or value-added telecommunication license. So it is generally suggested for the companies looking to enter into a specific sector to make the assessment first on whether it is required for their foreign businesses to participate in specific activity. There are also some preferential tax policies for technology sector that may be allowed for the foreign investors to apply and to get the reduced tax rates. Here we summarize it in one table. I should also mention that it is critical to define the way that you are planning to bring your technology. For instance, if you have a software that you're trying to bring to China and you have different options like download from the cloud, import it on CD or a stick. All of these three different models will have different tax implications, and it may heavily impact your margins. So good financial planning is also important here. China is making giant steps to transform the economy. And finally, to summarize, it gear ups for their entire market being dominated by the digital evolution. Post-coronavirus will bring new business models strongly involved with technology. Also, more businesses are considering to look into China Plus strategy for the global supply chains. I guess that's all from my side.
Fantastic. Thank you, Maria. Yeah.
Let me try to, okay. Stop sharing, right? Mm-hmm.
Brilliant. Well, thank you very much for giving us the broad overview of what is happening in China, what's the impact on tech. So that has been great to start the conversation with this broad picture. And I would like to invite right now Shira Pan, Head of Technology at Department for International Trade's China office, to share her insights on tech role in COVID-19 response and some of the trends and challenges and opportunities that she and her team sees.
Sure, thank you, Dom. I think I need to share my screen. I think there is kind of a hiccup between the slide transition. Okay, I got it. Wait for a second. Let me load my screen here. Okay, cool, thank you. Let me just quickly. So just to say hi to everyone, good morning. My name is Shira Pan. And for those of you who are not familiar with DIT, Department for International Trade, so we do two things. We help British business to expand to international markets, and we also help to attract high quality investment back into the UK. So my daily work is very much about, making sure the tech business in the UK and in China, they're talking to each other with support from Tech UK and CBBC. So my presentation today is very much about, sharing case studies and examples of how China is combating COVID-19, what's the tech response of that. So just to build on Maria's good assets, just to share some, trends we see in long term after, COVID-19 to China's tech industry. So we definitely see the speed up of the digital sectors and the digitalization of those traditional sectors, especially in health, logistics, online office, entertainment, retail, and education. And we also see the speed up of government data sharing. So the Chinese government is deploying new practices on policy on data sharing and transformation. And we also see the trend of the decentralization in those tier 1 cities, which got more than 10 million, park in Beijing, Shanghai, and Shenzhen, to see those digitalization process, moving to those tier 2 or tier 3 cities, creating new opportunities in smart cities. And I also want to highlight, just based on Maria's presentation, the Chinese government's new initiative of the new digital infrastructure strategy. So in Chinese, we call it 新基建. So this new digital infrastructure is not something really new. It has been raised since 2018, but it has recently been reflected and highlighted again in almost all central and regional government meetings. So we understand that the investments into the new digital infrastructure in 2020 expected to reach 2.1 trillion in 2020 to put investments into 5G, emerging technologies, and industry, internet, etc. And let's also see the growth areas performance. So again, we mentioned about digital health, remote working, and AI-powered equipment. Just to give you some figures. So for digital health, the spending on AI in Chinese hospitals back in 2019 has already reached 1.3 billion yuan RMB, and that was kind of 88% increase compared to the previous year. And post COVID-19 would definitely, there's undoubtedly will be further increases on the digital health investments into China's health systems and hospitals. And remote working, so data shows in China during COVID-19, we saw a 300% increase on downloading those remote working apps, and typical players including Tencent Meeting and DingTalk on the Alibaba. That was also kind of a huge increase in terms of user subscription. And we also see lots of different usage of drones, which turns to be usually a bit controversial item. So in addition to, drones are used to equip with thermal cameras to patrol streets, the drones were also deployed to deliver medical supplies and also used to spray disinfectant solutions in the streets. And also we have seen challenges here. So just add on Maria's presentation. So again, what we see in China markets is the impact on hardware is much more greater than the software. The impact on the smart terminals is greater than those digital infrastructures. So standing by now, entering China in May, we see, people are returning to work, but those international events and domestic events are still facing very serious cancellations. Those events scheduled in second half of the year are facing postpone or go virtual, which will be translated into direct or indirect financial losses. And Maria also mentioned on the supply chain disruption, which is not new to everyone. Just to give you more figures, so China, who covers 80% of global smartphone market, is also see a huge decrease in terms of smartphone shipments. So according to TrendForce, the smartphone production in Q2 is going to expected to have a 65.5 decrease compared to the previous year, setting a historical record for decline. Again, the construction of 5G network has slowed down, especially in the semiconductor industry, while some of the key components are manufactured in Wuhan. Among the all, we see the new competition area is 5G, which see kind of a slight increase in Q1. So thanks to the higher demand, mainly generated in Chinese domestic market. So let's move on to those case studies. And here I'm sharing a very clear chart, shows what kind of technology has been used in which sector and in which scenario. And going forward, I'm going to give you examples of each vertical applications. Okay. Information sharing. So when we say information sharing, we mean two things. First is to make sure the public, the citizens, are getting the latest updates on the epidemic situation. And it will also mean the information collection to enable governments to make the right decisions in time. So, first of all, I think we need to thank to the robust mobile internet industry in China with those tech giants who has a large user base. It's very much of a joint effort between tech giants, BAT, Baidu, Tencent, Alibaba, and with Chinese telecom operators, as well as government organizations who are able to consolidate relevant data into one platform. So just to give one example, so for almost every single map provider are providing people density map to their users. So Baidu launched a location-based service. So basically you can check the density of people in public spaces, in hospital, and in shopping mall, and in those transportation hubs. And for Tencent, which some of you, I bet you got your WeChat application on your phone, they have launched a real-time anti-epidemic mini program on the WeChat platform. Basically, it's a very simple interface, gets everything you really need to understand about epidemic. So for example, while that mini app, you can access tools for self-fever examination, for clinical inquiry. You can check the travel routine for those who might travel with, confirmed patients. And you can also, submit your face mask submission for yourself, which was definitely out of stock. And what I like the most is they have launched a tool to verify rumors. For example, whether dogs and cats will be carrying the virus during the break. So there do have a lot of favorable applications being launched. And also what I want to also share is Ant Financial. They've launched the online medical goods and resources management platform using blockchain technologies. So basically they're using this technology to examine and verify information on raw material demand, supply, transportation, and store relevant certificates on the chain, which definitely helped the chaos in such circumstances of medical supply shortage. So that is another usage of information sharing across different platforms. Let's move to healthcare, which I think is much more straightforward to understand. So usually the CT scans for the patients would be abnormal. And there are simply too many CT scans images for doctor to examine. To address such challenges, several Chinese AI companies has offered their CT imaging solutions. The first one come up with offer in the market is a Chinese AI company called E2. And they basically can provide clinical experts with quantitative analysis on CT images within 2 to 3 seconds. Having said that, so this is not a definite diagnosis to conclude the decision, but it's very much of assistant diagnostic tool to assist doctor to give the right judgment. So more than 100 hospitals in China have been using the services from February. And also we see a huge rise of online health consultation apps. So we call it teledoctors. So the likes of JD, Ping An, all launched their online health consultation apps, and we see a huge growth in terms of internet users. So I think that definitely helped those with mild infections, and it's also supported hospitals to ensure the medical resources was allocated to the right patients and reduced the risk of cross infection. And let's move to online education. I think for those of you who has kids at home would have a much more deeper feeling than myself. So for online education, the Ministry of Education in China, they are providing a free cloud education platform nationally. And during COVID-19 crisis, the online education market has activated more than 300 million users of online education. One of the big winners in this campaign is Ding Talk. If you see the kind of the above the logo that was under Alibaba, they have been facilitating more than 120 million students in 30 regions in the country to be able to study online. And what we find more interesting is, more than 3.5 million teachers has become anchors on the platform, and they will stay, most of them will stay to continue to share their great content with students. And we also see those traditional vocational training institutions like New Oriental, XDF, they also have launched their online education services platform as well. So in previous slides, I mentioned that there was a clear decrease in terms of PC and the smart devices, tablets, iPads, but we found very interesting in China, there is a very much increased demand on education tablets. So that is the Dezan tablets for school use. You're not able to download or actually install any games on there. It's very much for for children to focus on their study, and this is being manufactured in China now massively, and we see growing in this education tablet subcategory. And remote working. I shared earlier that, there is a 300 increase in terms of downloading compared to 2 months ago for those apps. And the 4 big player is again DingTalk under Alibaba, WeChat Work under Tencent, WeLink under Huawei, and Lark under ByteDance. Again, it's very much of those tech giants game. They are trying to, they're kind of competing in the market. Almost all of these providers have launched free services during this time. For example, Tencent Meeting, they're offering free services to users to host comm calls for up to 300 people online at the same time. Till the epidemic is under control. So it's still free at the moment. And we also see a trend of those meeting app providers entry international market. For example, both ByteDance and Tencent, they are providing free services in international markets, including UK. So this is also means competition arises with what existing offer in the UK. For finance, so traditionally, as a financial industry has been the highland for AI applications. So in 2019 alone, the market size of AI in financial service industry has already reached 2.4 billion. So among them, the most mature applications are, face recognition to identify the people, and the chatbot, machine learning for anti-fraud. That was the most common use application. So during COVID-19, we see increase of low management apps and software available. So Kimde, which is a Guangzhou-based software group, they built their first corporate credit services based on ERP data. So the financial arm lent 50 million RMB to SMEs, and basically SMEs can apply and lend the loan on the same day. And also they have partnered with the Bank of Beijing, jointly launched epidemic loan to catering industry, depends on annual sales income of those specific restaurants. So that is something they're doing in those most impacted sectors. Then we got customer service chatbot. A lot of e-commerce supplier and also a lot of financial institutions has launched or enforced and their chat robot services. For Suning, for example, the transfer rate to manual services is below 10%, and answer accuracy exceeds 90%. And they also are promoting their AI financial assistance service to customers who can purchase wealth management products online. And for logistics, so if you're looking at the first example is Meituan, is basically the counterpart of Deliverable in the UK. When we're talking about logistic applications, it's very much about the drone delivery and the smart logistic distribution and the non-contact delivery services. So for Meituan, for example, they began to use robots to fulfill orders since January, and their services was available in more than 184 cities in January at the very beginning. And for JD Logistics, they had done a very good job in Wuhan. So for example, 2/3 of the orders to Wuhan Hospital, which is Wuhan 9th Hospital, are delivered by AI robots and autonomous vehicles. And the Jingdong Logistics also delivered groceries to local communities by autonomous delivery robots in Wuhan city under that very special time. And for retail sector, again, we see a huge increase of the online grocery apps. So the biggest benefiter are Hema under Alibaba and also JD.com. And we see a 350 increase of downloading in those platforms during the epidemic period. To mention that, Alibaba, again, they have been providing financial relief to those merchants on their Taobao platform, which is equivalent of eBay. So they're waiving 6 months platform fee and also a warehouse fee to their merchants to make sure they not get that affected by this virus. And also they launched a Blue Ocean employee sharing platform, basically to deploy those who were not working in the retail in their and other sectors, catering sectors, to recruit them to for temporary home delivery services, which has elevated the pressure of local communities. I think this is very much, from me, snapshots of how Chinese tech companies is supporting the society and is help government to making effective decisions, help students to continue their study, and also make sure trying to maintain business as usual. That's all from me. I welcome any other questions afterwards in the Q&A session. Thank you.
Fantastic. Thank you, Sherry. It's been really interesting and fascinating presentation, I think, for all of us. And just for the benefit of time, Dr. Jian Cao, could you present your presentation on the impacts on investment and what you see as the key trends?
Hello, hi, everybody. Yes, I will share my screen. Yeah.
We still don't see the screen. Brilliant. Sorry.
Okay, yeah. That's great. Yeah. Good morning, everybody. So today I'm going to discuss what's the very brief talk about investment impact, especially for early stage tech companies. So it's a very difficult time for everyone in current COVID-19 outbreak. So it may still affect for many early stage tech companies, especially in the post-lockdown for a period of time. What I'm talking about is maybe next 1 to 2 years time. It's still be a challenge time. So as an investor, when we look at the companies to invest, so what we see in the impact from this situation, that have some of the current aspect. First is what we look at companies, the milestone achievement may delay. The technical milestone might be delayed. The commercial milestone might not be reached as well. And other many uncertainty have occurred in areas such as supply chain, manufacturing, this of the barrier. So that investor, when invest, will be according to the milestone. Those milestone, I think it will be expected to delay. And also, when the investment come, they feel many of the outstanding bill need to pay from this investment fund rather than can develop for certain new milestones. So the company's spending definitely more than expect to achieve the same goal. And also the next following investment, the follow-up investment probably need a higher to cover the cost. This is all the concern, and the market, because after the post-lockdown, the market still need recover slowly. The customer engagement and also market sale, all this will be effect. So in summary, more money will be required to achieve the same goal as planned. Less spending will be necessary to survive longer, because this is very important to the company, early stage tech company, to survive longer, to make their own cash flow better. That would be before the next round of investment. This will help for the investment as well. Unfortunately, the low valuation might be expected for investment. This is for real challenge. So they also have some of the opportunities, because many tech company may face problem for their tightened cash flow. One of the opportunities to think sub-license the technology into a Chinese market, or R&D collaboration with those companies through joint research program, for example. Especially for, it's a very interesting and very popular at the moment for pharmaceutical company or healthcare sector, after if the product or after finishing the second clinical trial. Many Chinese companies now are seeking for licensing deal in Chinese market. This might help for the cash flow. We just say they have a R&D and research collaboration to try to help the company to solve the shortage of the cash. And what we see in the trend for the next stage. First of all, in China, the overseas investment approval began to lose. In the past 2 years, what we can say is it's so difficult to get through the approval from China, invest into, for example, into the UK. The overseas investment is very tight. It's so difficult to get approval, especially need at least 6 months, even longer. But now started to lose. That would be better opportunity for finding a Chinese investment from the local Chinese fund or companies. This is one of the potential opportunities. And due to the impact of this current situation, I think VC in China has suffered a huge loss, and alongside also the invested company. They're facing difficult time as well from themselves. Before that, the valuation from China, any company, the valuation, the premier given by Chinese capital market has gone. When we look back last year, even longer, when the investor look at the valuation of the UK company, they believe this slightly undervalued. So what they are happy about any of the valuation, most of the valuation. Now the time is different now. The people especially investors start to look at the valuation. Then they are trying to reduce their risk by lower the valuation for themselves for reduce their investment cost. That might happen in the next stage of the maybe because what the VC and the investor look in the next 2 years always be difficult to any company is getting difficult to get funding from next 2 years, because that's why they're also trying to minimize their cost by lower the valuation. And another situation is for investment type, actually due to the possible global recession. I think companies now face crucial lack of funding. But now the people from PE type of investment will play leading role in the next stage rather than the VC. This is what when I look at some of the PE company that start to see the opportunities, but for the VC that start to losing their confidence, need to see more, especially need to look at the company's cash flow. This is a very important and for them. And now the VC now divided to specialized into a sector. But before that, many of the VCs just invest in any sectors. But now they started to specialize to one or two or certain sector, which is they're familiar with, and together with the industrial. This is a new, I think, the new trend from the VC. They will to invest into the familiar and specialized area with their partners, industrial partners. This is and also one of the most important things they needed to look at the company have healthy cash flow. So far, so we just gave one of the example what you're trying to do for next stage. So we call 1+3 model. This is one of the model now is getting popular in China, Chinese investors. One is the advanced technology and innovation capability in the UK. UK has a world leading advanced technology and need a large market and also reasonable valuation and limited resource in the UK. But in China, they have enormous market, strong capital strength, and also the manufacturing capacity. That's why the investment, any of the investment trying to merge this together, trying to invest into the UK, but also this business can integrate together with this market capital and also the technology. So that's why for us, from a UK China Enterprise Fund, as an example, we're trying to establish this kind of investment, which is investing into the UK, the very early stage, seed stage and early VC stage, together with other investors. It's we launched one of the program with Crayfish Accelerator as well. This in China, we have a larger parallel fund, which is help for establish the JV or help UK company to access to the Chinese market and also the financial support. In another side, put this together, we hopefully to accelerate the company. So this is just, I think, from the investment side. Now the healthcare is a very hot topic. This will be more opportunity to get investment and also advanced manufacturing or new materials. All this kind of area now is, I think, it's good opportunity to collaborate with Chinese investor. So this is just all from me. It's a very brief discussion from here. Thank you.
Fantastic. Thank you very much, Jian Cao. That's been brilliant. And I think I will thank you to all presenters for giving us a good overview of where the market is right now, how tech is involved in different technology, different verticals in terms of responding to COVID-19, and then also the impact on investments now and what are some of the trends. So maybe just to kick off with some of the questions that we've received, and appreciate we don't have too much time, so I'll try to summarize some of the questions and put them together. So this is a question for all speakers. Can you share some thoughts about some key tectonic shifts that you see in business and consumer behavior in China in relation to tech, and where do you see that longer term impact? We had questions about technology use, we had questions about the privacy and personal data usage, and others. So if you could just give us that broader picture from your perspective, what are some of the broader tectonic shifts on behavior? Maria, do you want to kick us off, or Sherry or Xiao? I think you're on mute, so you might need to.
Okay, now it's okay?
Brilliant.
Sure, yeah, I probably can start. I can give some comments from what we see from our perspective, from the businesses that are coming, and as we serve businesses, foreign businesses who are established or trying to enter the market, how they address the changes from the consumer perspective. The major shift naturally is the stronger appetite for online shopping. So a lot of companies are actually investing into social and e-commerce engagements. China itself is opening, and it's a process of 46 new e-commerce zones. In addition to the existing, I think it's about 70 or 80 already. So it will be more than 130 e-commerce zones where it will be also allowing preferential tax treatments. It will be online ecosystem for all the transactions and also imports and exports. So companies will need to adjust to that, and foreign businesses enter and trading naturally. There's a big trend, for instance, for the fresh food retail. We also see that due to the increased number of those online transactions and those clients that appeared, the companies need to adjust their internal systems. For instance, inventory, logistics, all the connectivity of cross-border, and there's a firewall between China and the world. So they have to improve the connectivity for sure. There is also the need for more sophisticated ERP systems to serve these clients, to serve this increased number of the transactions, increased number of online retailers. From the perspective of the companies that are operating in the services, we see more and more companies that are entering into e-learning sector, gaming, or software sales. So those are the trends that we believe will continue to actually exist and will change the trading flows significantly, even after the COVID-19.
Thank you, Maria. And Sherry, would you like to add something from your side as well, from DIT's perspective, from your team's engagement with China's market as well? What are some of the key shifts you see? And also there have been some specific questions in terms of DIT supports as well for bringing the FDI into the UK and bringing some of the technologies from China's side to the UK. What's the DIT's focus at the moment?
Sure. Thank you. Thank you for those very, sometimes obviously this is a challenging question. So first of all, let's focus on the train. So again, I mentioned in some of my slides. So again, I think what we see the biggest change will be the speed up of the digitalization process in those traditional sectors. Again, this is not something really new, but the COVID-19 definitely will accelerate those processes, especially in terms of the new business model emerged in healthcare, in entertainment, in education. So I think the consumer behavior will also be changed and impacted. I think, for example, in hospitals, they wouldn't expect such a long queue in the life post COVID-19, and as some of us are really get used to using the apps to send our online inquiries to reduce the workload of hospital doctors. That was one of the example, which I also shared the interesting point about decentralization in those tier 1 cities, in those Beijing, Shanghai, Guangzhou, and Shenzhen, which got really, limited and not really sufficient healthcare and also education and, supplies in such kind of, typical time. So we'll be seeing more regional divisions, for example, Great Bay Area, more opportunities will exist in those tier 2 and tier 3 cities as a long game changer. And also in terms of some of the challenges and questions are very much on UK-China tech relationship. I see questions also raised on export control, national security, and what's the DIT's positions on that. So actually, before I jump on this one, we do have a senior member from DIT China online, Tony Clarkson, who worked as the Deputy Director in DIT China, and who also was the Deputy Consul General in British Consulate Shanghai. So I hope if he can unmute himself later, he can contribute a more broader view of how we stand at in terms of the tech relationship between UK and China. But just to give you kind of a bit background, there were actually noises in this market, but the UK do have a very constructive partnership with China. And this is a very strong economic relationship worth 100 billion. And our position in the UK is, will be pragmatic, maximize the benefits of cooperation while protecting the national security. So it's all considered. So I'm just wondering if Tony, if you are able to unmute yourself, do you want to kind of share a bit of your insights on the tech relationship between the two countries?
Thanks, Sherry, and good morning, everybody. I'll be brief. I think Sherry's set it out well. So I've been in China for about 4 years, working for the British government, for the Foreign Office and DIT. And I think the point that was made earlier on the call about there's a lot of noise, and I think that's the important bit, is to separate the noise from the British government's position. And the British government fully recognises the importance of working with China on a whole wide range of issues, but including on technology. And in fact, recognition that to deal with the really big issues that we're facing around COVID-19, around education and climate change and transition to clean energy, around development and fintech and agri-tech and wider health issues, that we have to work with China. And we take an open and transparent approach to that. And I think it's really important to note that in the last few weeks, we've had 2 phone calls between Prime Minister Boris Johnson and President Xi that have been very positive. And they've agreed on the importance of the relation and continuing to work together. And following on from that, phone calls from the British Foreign Minister with his counterpart, Secretary of State for Health, for Business, and so on, have all had very constructive engagements with their Chinese counterparts. And we've all agreed the need to continue working and developing and growing the relationship. So I think when we see a lot of noise in the media and from some perhaps members of the Houses of Parliament, it's important to separate that from the position of the British government, which remains very focused on working together to solve these global goods. Thanks, Sharon.
Thanks, Tony, and just appreciate that we're running already couple of minutes over time. So Jian Cao, if you want to give very briefly final remarks as well from your side about the questions about tectonic shifts, consumer behavior, you know, impacts as well on investments, anything like final remarks, and that would be great. Thanks.
Okay, yeah. I think in China in 2003, when SARS outbreaks, after that, China has Alibaba. But now, after this pandemic, we think people always think about the online sector. Anything with online plus the AI together, machine learning with the online, this is a type of consumer will be attractive from anyone. Because from an investor side aspect, they all look at now look at the online or e-healthy, e-healthcare. All this plus the online side is very attractive now, plus the machine learning together with big data.
Wonderful, thank you very much. And thank you all for joining us today. It's been a really interesting discussion. Thank you for speakers for bringing their insights about the, you know, taking this stock where we are now. I wonder, Mark, if you would like to say a couple of words about the next session and what CBBC is planning for June and how the next forum session will be fitting into that agenda. The final remark.
Yeah, thanks, Dom. Yeah, and thank you again to all today's speakers. As I said in the chat box, we will send out the slides for anyone who requests them. So please do just let us know if you want to receive a copy of those. For the next session, it looks as though we're going to be doing it on the 17th of June, although it's not 100% confirmed the date. CBBC is actually looking that week to organise a week-long programme of events, a kind of China week, as it were. And so we'd like to take the opportunity to kind of run the next session as part of that. So we will be sharing more details over the next week or two of what that China week looks like and how you can get involved. But for now, if you can sort of pencil that date in, it's likely to be the afternoon of, I think it's Wednesday, the 17th of June. And as Dom says, we're going to be sort of following up this session where we've been really looking at how China's responded to COVID and short-term opportunities to sort of looking more at the long-term outlook for UK-China trade and investment in the tech sector. And I think that some of the questions that we've touched on, but maybe not answered in a huge amount of detail, we may be able to tackle a little bit more ambitiously in the next session. Obviously, some of these questions are very difficult and they're still unfolding in front of our eyes in terms of you know, how we deal with issues around the privacy issues that deploying some of these technologies to fight COVID sort of brings up. The issue of the UK's relationship with the US and how that will pan out in relation to China, and of course how the UK will continue to attract and work with Chinese investment and deal with things like the national security review. So we will, the next session will be a longer session, and it'll probably be an hour and a half and to 2 hours, and we'll probably have sort of a couple of panels. So please do watch this space for more information on that.
Wonderful, thanks Mark. And thank you all for joining us today. Apologies for running slightly over time in terms of what we expected to be a 1 hour session. But thank you for staying with us. Thank you for speakers again for joining us and sharing insights. And we look forward to engaging in future sessions. Thank you very much and have a good
Thank you.
rest of the day.
Have a good day.
Thank you.